Good afternoon, everybody. It's 4 o'clock on a Thursday afternoon. This is when we have the one-stop shop produced by MariosHomeNews.com. And as mentioned earlier in my brief video, today we're going to be responding to specific questions that have been sent to us by various viewers who would like some information regarding some of their concerns. Before we get started, I just wanted to give a shout out to the Kendall Hammocks Optimist, who stopped by the office today to give us our annual plaque. This is the 5th year that Strachan Tanner Mortgage sponsors the Warriors team, and from what I understand, they had a great season and will be participating again come the fall. So congratulations to the Warriors, the players, the moms, the coaches. Great job in building a great foundation for the young ones here in the Kendall area. So let's get right to work here. I'm going to be looking at my notes because I have about 7 or 8 questions that were sent to us, and I'd like to be able to expand on all of them. So the first question is, I would like to ask, as a first-time buyer, what is the best type of loan for myself? So as a first-time buyer, if you have the down payment, it all depends on the down payment. So if you have a low down payment, then it's either going to be an FHA loan with 3.5%, or if you are credit worthy with a certain amount of credit FICO, then you may qualify for a 3% conventional down payment loan. So it's on an individualized basis. It's based on your credit, how much money you have for down payment, your income. Also, your income has a lot to do with it because your debt to income ratio is going to determine whether we can go conventional or we can go FHA. FHA traditionally allows for a higher debt to income ratio. So if your income is not completely there where we need it to be, we may be forced to going FHA. If not, then we will look at conventional, which is always less on the mortgage insurance premium. The conventional is lender paid mortgage insurance premium, where the mortgage insurance premium on FHA is slightly higher on the upfront, and it's also higher for the life of the loan. My next question is, I have my doubts if I should apply for FHA or for a conventional loan. My credit score, it's still not that great. Not sure if it's good time to buy now or wait until the credit score gets better. Okay, so there's a couple of things in this question. As far as buying now or later, as far as right now, the rates appear to be steady. The Fed last week announced that it's not going to raise rates for the remainder of the year, so that's one thing you don't have to worry about. The thing is that homes are going to continue to appreciate. What we don't know is how high are they going to appreciate on an annualized basis. The average appreciation for homes is usually around 4%. That's a national average. So the longer you wait, the more expensive the home is going to become. So it's a matter of which came first, the chicken or the egg. So, we would highly recommend you get that credit score up as quickly as possible by a professional credit repair individual. And if you need help with that, we could definitely refer you to some of the best here in the Dade County area, and they work the entire state of Florida and outside the state of Florida. So we can assist and refer you to some of those professionals. But as far as waiting, if you find a house that you really like, then maybe now's the time. If not, fix your credit and then decide which one of the 2 loan programs is going to be best for you, whether it's FHA or conventional, depending on your credit score, depending on your income, and how much your debt to income ratio will be at the time that contract is going to be placed for purchase. The next one. Can you please give me your professional feedback on the market and on the type of loan I should consider? Well, as far as the market, today, the market is looking good. It's slightly up. And the reason for that is because this China-U.S. deal had some positive things occur today. And if that goes through, it will probably accelerate and increase the appreciation of real estate. If not, other people in the news are saying that we're heading into a little bit of a slowdown. The word recession comes up once in a while, but they talk about it one day as being going into a recession. The next day they talk about it going positive. One day the Dow goes down. The next day it goes up. The S&P back and forth. So what is the right time? The right time is when you're ready. When you're ready to make the commitment to get into home ownership, whether it's your first home or whether you're moving up to a bigger home, the right time in the marketplace is when you're ready. When everything is aligned, your income, your credit score, your debt to income ratios, how much money you have available to make the purchase, that is the right time for you. So don't listen to all the noise out there, because there's a lot of noise. There's a lot of noise on TV. There's a lot of noise on social media. There's probably a lot of noise where you work with your coworkers. There's probably a lot of noise on Sunday afternoons when you're gathered with family. So the best time is really when you are ready and everything is aligned for you to make that purchase. So the next one is a multiple question, and I'm going to try to take it in pieces. When is a good time to use a HELOC or a home equity line of credit? Anytime's a good time to use a home equity line of credit if that product, depending on what you're going to use that product for. Most people use home equity lines of credit as a second mortgage to use those funds either for home repairs, home remodeling, or even just to have it available in liquidity in the event that there's an emergency and they need those funds. The funds are usually there. A home equity line of credit usually has a variable rate which adjusts every month according to the interest rates and what the Fed does. So right now, the Fed just announced last week that there won't be any increases for the rest of the year. So more than likely, those rates are going to hold steady. So this is a good time to use a home equity line of credit if you want to use it for the right reason. Also, keep in mind that a home equity line of credit is like renting money. So you're paying interest on the principal, but it's not like you're paying principal and interest at the same time. So you're paying interest every month. Eventually, you got to pay off the entire amount. So if you don't feel that you're going to be able to pay off that principal in a lump sum or large chunks as you move along, they usually have a 10-year period, and they will have to be paid off at the end of the 10 years or less. So you need to really focus in on the details and be sure that that would be the product for you. The next question, part of the home equity line of credit, is can you use home equity lines of credit for primary residence or for investment property? Well, you could use it for either or. On a primary residence, you could use it as a primary loan, or you could do it as a second mortgage. On an investment property, sometimes it's good if the property is paid for to have that line of credit available that you have received against the real estate of that investment property, so that if another opportunity would arise, then you would have that money available and you could write a check and actually buy another property cash. I like that concept. I like to have lines of credit on investment properties so that if an opportunity would arise, we can make a cash offer contract to close in less than 30 days and use that line of credit to be able to pay that off. And then the income from that investment property would actually pay that loan off. The next one is, do you prefer to have a line of credit in first position or second position? So if it's an investment property, I prefer to have it in first position, especially if the property is paid for and there's no mortgages on it. If it's a primary residence, I always like to have a second mortgage as a home equity line of credit for emergency basis. So whether it's 50,000, 100,000 against your current home, it's always good to have those because you never know when you need that cash. And if you don't have the liquidity in your bank account, your savings account, it's always good to have it as part of your primary residence. Have that as your slush fund to use in the right time or for the right things. Not to take a 6-month cruise to Europe. That's not what that's for. It's used for strategic purposes when you need that money to either improve the home or take a look at using your current home to help you purchase possibly either a second home or an investment property. So I've been asked to recommend a few home equity line of credit banks. We personally don't do them, but we have bank partners that do. And not to leave anybody out, I'm going to do this by geographic area. So if you're in the Coral Gables area, I highly recommend Frank Fernandez of Center Stage Bank. Frank's a great friend. I've known him for a long time from the years at U.S. Century Bank, and he could definitely help you there. And if you need his number, I'll be more than happy to give it to you. If you're in the West Miller, Kendall area, I would recommend Eduardo Savori with Ocean Bank. Longtime banker, formerly with Bank United, and now the head guy over at Ocean Bank on Miller and 147th. If you're in the South Galloway and Baptist Hospital area, I highly recommend Carmen Gonzalez with City National Bank. Been a banker for many years, and she could definitely help you. Tremendous personal service. If you're in the Westchester area, my longtime friend Raquel Benitez with U.S. Century Bank could definitely help you out. Her branch is located right there on Bird Road and 87th Avenue. If you're in Miami Springs, Margarita La Madrid with TD Bank, longtime friend, great banker, and also with TD Bank. If you're in the West Kendall area of Bird Road, Bird and 147th, Lisette Rosetta, she runs the branch for TD Bank out in that area. And last but not least, a longtime friend, and he's a member of the Greater Kendall Business Association, Michael Welch. He's the president of University Credit Union. And if you're in the Tamiami Airport and the Three Lakes area, I highly recommend you walk into their branch over there near 136th Street between 127th and 137th Avenue and ask for Michael Welch. He actually is the president of University Credit Union. Okay, so what is a down payment assistance program and how does that work? So down payment assistance programs is actually a word camouflaged for the first-time home buyer. This is really the first-time home buyer program where based on income, based on credit, this is a federal program that is basically assigned. The dollars are assigned to the bigger banks. When I say the bigger banks, I'm talking about Bank of America, Citi, Chase, SunTrust, Wells Fargo. These are the big players nationwide. And the reason that they're the ones that primarily have this money because it's a lot easier for the government to control these down payment assistance programs, which based on need, the bank will lend in the geographic area where they're located. So depending on the area that you're located in or that you're looking to buy the house and get some down payment assistance, I would walk into one of those branches in the neighborhood that you want to be able to see if you could afford a home in, whether it's a home or a townhouse. Sit down with the branch manager or one of the customer service reps, let them know that you're interested in this program, see if they have the funds available for that area, and how do you apply? How do you apply for this type of program, and what are the requirements, the qualifications, and just ask them. That's how this works. If that bank does not have the funds allocated at the time and they're not being helpful, then walk into another branch of a different bank until you find the one that will work for you. Once again, these are controlled funds from the government to the local communities, and they want that money to be used in the local community, kind of like a community reinvestment type program where they're going to help you to get into your home. But remember, you still got to qualify, you still got to have the income, you got to have a certain debt to income ratio, but they will help you with the entire down payment. They'll assist you with that. The main part of this is that you got to stay in the home for 10 years, and after the 10th year, it goes away, that portion of the down payment assistance program. So you have to live in the home. If you leave the home before the 10 years is up, you're going to have to pay that money back at time of sale. Okay, so be careful with that, but it is a good program and it has helped a lot of people. The last question here is, my wife and I are looking at investment properties, either to flip or to hold. We'd like to talk about the lending options that go along with these type of products. So there's a lot of people out there right now looking to buy distressed property. They're looking to possibly improve the property and either rent it out, or they're looking to flip it to make a profit. One of the important things about this type of program is you need to make sure you buy the property for the least amount possible, because your profit when you go to flip is actually built into the price that you buy, not the price that you sell. So you really got to do your math, and you have to do the numbers properly and be able to properly estimate what you need to do. If you don't have a lot of cash to do this type of operation, probably the fastest way to be in position to buy these kind of properties is to private money lenders. They will usually lend you anywhere from 50 to 60%, sometimes maybe a little bit higher. They don't require a lot of paperwork. You just need to be employed, have a continuous job, and then you have the rest of the money. And then when you submit the contract, you're going to submit that contract as a cash purchase. That'll give you an advantage over anybody else that is actually looking to purchase that property, and then you could get rolling on the on buying investment property for either holding or flipping. So it's a nice niche. There's a lot of people that do this on a part-time or full-time basis. It's just that, once again, you got to be careful with the calculations of your math, because you don't want to hit an unexpected situation in the construction or reconstruction or the repair. You might want to have yourself a good GC that knows how to be able to price that repair for you. We got a couple of great friends and business partners and clients. So if you need help with that, let us know, and we'll be more than happy to coach you with that. So I hope you've enjoyed today's format of the various questions that we received from viewers. And if you have any questions that I might be able to address in future shows, just go ahead and email me at Mario@stcloans.com. Don't put an at the beginning of Mario. So Mario@stcloans.com. You send me the emails, and I'll either do another feature like this, or I'll work them into the weekly show. It's always a pleasure to share some time with you and some of the knowledge and content that we have here at the One Stop Shop. And if you need to get a hold of me, the best way is either here at the office, 305-598-1600. That's the office, or my cell, 305-588-0451. Finally, I want to give a shout out to Andy Rodriguez, my co-producer, who's still a little bit under the weather, but apparently he should be back to work next week. We missed him today at the Greater Kendall Business Association luncheon, but Stella Kessler did a great job pinch hitting for him. And our speaker, Richard Booth, who talked about medical marijuana, did a fantastic job. And Richard, we really appreciate you coming out and sharing your knowledge with everyone at the luncheon. So once again, thank you, everyone. Make it a great day. And don't forget, MariosHomeNews.com, the one-stop shop for all your real estate and mortgage needs. Make it a great day.